The dollar and the market are both green today. So in today's video, I'm going to do my best to go over the overall market and explain what my thought process is for the next steps. All right, so without further ado, let's get started with the video. So number one, we've got some important news coming out tomorrow morning at 10 a.m. We have ISM versus PMI data coming out at 10 a.m. So we cannot hold any positions during that time while we're day trading. All right, so keep that in mind. All right, so we basically had the entire market, much of the market basically gap down this morning. So yeah, Tesla, Nvidia, AMD, Google, Microsoft didn't really gap down actually, but Amazon, Apple, a lot of these companies basically all gap down, and Apple specifically opened outside of the lower level of the Bollinger Band. So also the NASDAQ, the IWM, the SPY, everything basically gapped down and we reversed. So what's interesting to see here is immediately, right, this just looks like a bit of a short squeeze. I'm not entirely convinced that this move is going to have enough steam to go to the upside and continue to break above like 408. I would be very, very surprised if from here we break above 408. And essentially the main reason for that is because the dollar is also looks very bullish. So people are positioned very heavily on the dollar, but the equities market is basically getting a bounce. So what this tells me is, first of all, the dollar has a negatively correlated relationship to the market. So if the dollar is doing well, the stock market should be falling. But today we see that the dollar is bouncing. We can clearly see that it's still in an uptrend, right? We had a big red day yesterday and then we reversed and broke above yesterday's high and closed right below it. So it's not the most bullish close, right? But this is definitely a bullish setup on the dollar. Well, you know, this just looks like we should continue up. And the issue is that the SPY also looks like we should continue up. So just both of them in general, they look like we should get a retest of levels of support and go a bit higher. So 400 is going to be a very, very major level. 400 to 402 is going to be major support or major resistance on the SPY. So it's going to be very, very interesting because right now, like, we already see that there's the correlation between the dollar and the SPY isn't as perfect at the moment, but this can continue up. But the safest place of where I would want to go long again is if we get a break above 404, basically the high of February 21st. So if we start breaking above that level, then I would feel much more comfortable to lean a bit long. But for now, you know, going long even now is, you know, there's too much uncertainty in my opinion at the moment. Only because the dollar is showing strength. So if the dollar wasn't showing strength and the SPY, so if the dollar was weak and we also had this setup on the SPY, then I would feel way more comfortable to be long. But unfortunately, right, technically, yeah, sure, we could hold 396 on the SPY and continue up, but this is currently a trade that I'm not taking. I'm not long at the moment. But the setup does show that we could get a retest of 400, 399 to 400, but I would feel most comfortable to go long above 404 for a swing, right? So it's just going to be very, very incumbent on basically the dollar and the rest of the tech stocks. So today, this morning I was keying off of Tesla as well. If Tesla, if the large tech stocks can continue showing like a really substantial bounce, like for example, if Apple can really begin to close above these major resistance levels, then that would give more steam to the overall market. But right now, these just look like good shorting opportunities. So even if we get another bounce up, like they're not going to be strong. Like unless they're strong enough to break and close above levels of resistance, these are all just going to be good shorting opportunities. So it might be too early to add to shorts right now. but this is not like unfortunately, because the dollar is strong, right? This is not as clean of a long setup. Normally, this would be a pretty solid long opportunity. So just pragmatically looking at this, we broke below these lows. I said specifically one of the best times, the best opportunities for them would be if we got a break below this level of support. I was specifically saying this: if we got a break below this level of support, bounced off of 392, and then ripped upward afterward. I literally said this. That would be a great opportunity for a bear trap and a short squeeze, and we got a bounce. So that's literally exactly what happened. So based off of that, we could have another move up. 399 to 400 would be a pretty solid level that we should be able to retest. 400, 401 even would be a pretty good level that we should retest tomorrow. But then from there, I believe we can start stagnating. And then if somehow we end up breaking above and closing above 404, 404.50, then that's gonna be very, very interesting. Then I would be very interested to see what the dollar is going to do, because this is, you know, it looks like it's about to cross above on the MACD. We're at this uptrend level's upper level here, so we could get another break above. But then afterward, usually when we get a break above a downtrend, we come back and retest the trend line. So yeah, I mean, it's not as clean of a setup on equities, only because dollar is very strong. But otherwise, I'm telling you guys, if the dollar was not strong, this would be an amazing long opportunity in my opinion. Another reason why this would normally be an amazing long opportunity is because the VIX. So we know that the VIX has a negatively correlated relationship to the market as well. So if the VIX is going down, then the stock market should be going up, and that's exactly what happened here. So the VIX doesn't look good, right? If the VIX is bearish, then that means that the overall market should be bouncing. So this is definitely a very bearish move on the VIX. We closed below the 20 EMA. We closed below these major levels of support. The slow MACD line is starting to cross down lower, which is generally not very good for the VIX. But we are very, very oversold on the VIX. So this could lead to a bit of a bounce, but normally, telling you guys, this would just be normally this would be a really good long opportunity on the overall market, but the dollar is just showing trouble. And then the other problem is the bonds. So the bonds, we know, have a correlated relationship to the overall market. So if the bonds are doing well, then the overall market should also be doing well. But here, this is also not a bullish setup on the bonds. So we closed comfortably below these lows, comfortably below 124, comfortably. Like, this just looks very, very bearish. If this was a stock, you know, you would just wait for a bounce and then reshort. So this is a bearish setup. The MACD is still overbought, which means that there is still a lot more room to go to the downside on the bonds. The lower level of the bonds are not in free fall, but there's still a lot more room to go to the downside before we touch. And all of these reasons is it's basically also the RSI is showing a lot of negative. It's showing a lot more room to the downside as well. So this is not bullish on the bonds. It's not bullish on the dollar. Just equities are just showing extreme strength. And in my opinion, this is going to be primarily due to a short squeeze. So yeah, I would be very surprised if this is a continued move to the upside. And if we end up, I would be very, very, very shocked to see us break 407 like straight into this move. I would be pretty interested if that happens next week. But yeah, I mean, it all depends on how we close tomorrow. So that should be fun. So regardless, I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. I hope this made sense and I hope I helped. And with that being said, have an amazing night. Thank you.